Good afternoon, everyone, and I'm Robin Hart with the CMG Home Loans with Hart team. And today we are bridging the gap between the heavy global headlines and what they actually mean for your local housing market, as well as what it means to refinance or pay off some debt using your home. All right. So, as always, we try to look at the numbers. This is sourced between Mortgage Nuggets and Freddie Mac, and it's an average from over 200 lenders across the United States, so not a rate quote. Our 30-year fixed rates are holding between 6.5 and 6.52%, while we've been on a slight downward trend on VA rates. Jumbo and 15-year fixed rates have edged up. Now, remember, a rate is just a symptom today, and we're going to take a look at the disease that's causing the higher rates. Now, the big disease is inflation, which just climbed to 4.2% annually. Now, that's the highest it's been in 3 years. And this is being driven by energy or oil markets. Now, we are at day 105 of the Iranian war blockade or slash blockade, whatever you want to call it, with about 20% of the world's oil supply blocked. And with WTI crude holding today at a high of 84.50 per barrel, the Federal Reserve is going to continually be sidelined on making any benchmark cuts to their rates as long as they remain elevated beyond the 70s. Now, the number here shows 95, 98. That's because previous highs were that elevated and it's even gone higher. But currently we're waiting on a peace deal with it, we keep being told. Now, the market is on a hair trigger. Just yesterday, President Trump canceled plans on Iranian strikes and announced that the U.S. is in the middle of final negotiations to end the war. And while these peace teasers, which I call because we've heard a few of them before, they can cause temporary bond market rallies and even oil market rallies and futures rallies, this uncertainty keeps mortgage rates locked in at elevated ranges. So, this is important for you to understand because here's the thing. The markets are cycling from one day to the next, meaning one day oil will be high, so gas prices and inflation are high, which turn around thwart lower rates. So stop focusing in on the rates and start focusing in on the market housing prices that are currently available for sale. Now, housing is currently in a holding pattern due to the conflict and chaos halfway around the world. So here's the thing. You need to understand what buyers are hesitating for and what to make of it. Now, there's a macro pressure of elevated rates. There's the monthly squeeze, which are rising prices or housing costs. The average housing cost raised to about 21.52. But there's also a local squeeze out there. That's the universal tax hikes that occur. So guess what? Between all of them, they are increasing a squeeze on our home buyers. And if the news is getting too heavy, by the way, just join me on our podcast on YouTube, Murder, Mayhem, and Mortgages. We go beyond your normal real estate transaction and unveil the dark secrets, humor, and true life stories that happen behind the escrow close. It's real estate like you've never heard it before. All right. Now, there are some modern leading solutions we are transitioning to alleviate the high cost of entry to homeownership path. Now, FHFA and HUD are both studying the impacts of a 1% down payment and if there are any negative repercussions. Also, most lenders are now switching to a Vantage Score 4.0, which allows us to expand the buyer pools by encompassing things in payments like rents and other payments into the credit score rating, which will allow for higher scores. So if you've been thinking of waiting on housing, there's a micro opportunity here for you. You see, there are currently 38 major metros across the United States where home sellers outnumber home buyers. And by 43%, what that means is advantage for home buyers. So look at the long-term plays and not necessarily the short-term trends on rates. Now, I get asked, when is the best time to buy? Well, nationally, sellers are outnumbering buyers by 43% in 38 major metros, including Florida, Texas, Missouri, and even Louisiana. So guess what? Buyers currently hold more negotiating power than they have in the last 5 years. So if you find the right home, the time to act is now before rates drop and get sidelined and demand winds up flooding in. And next thing you know, you're back to higher negotiations and higher home prices. And that brings us to our meme of the week. Isn't it time you got on top of your housing situation? Don't be the one stuck on the roof. Anyway, all right. If you need help, we will help work with you. Let's talk and get you positioned a little more correctly. All right. Now, I'm Robin Hart. I'm here to help you build wealth through the purchase and refinance of housing. I'm licensed in Texas, Missouri, and Florida, and you can find me in my office working every single day to help home buyers and home sellers make the most of their financing on homes. Other than that, have a great week, stay hydrated, and we'll catch up with you soon.